Hi Carson, I wanted to make a short video to talk about pricing that we discussed briefly yesterday. So this is my United Wholesale Mortgage website, and you can see there's a lot of stuff here that can be valuable, but what I wanted to talk about is over here under what's called Easy Qualifier. So we're going to go to Easy Qualifier, and that's going to bring up how to price a loan. And you can enter lots of information in here about an individual and make certain selections. But once you've done that, it winds up being saved, and you can then go to Manage Scenarios. Now, the scenario that I have been looking at on a regular basis, well, first of all, here's Chris Bracci with his FHA Easy Qualifier. We're not going to look at that one, but this is one I look at couple times a week at least, just to see what rates are doing. So I call this VA IRRRL because that means it stands for VA IRRRL, which is an interest rate reduction loan. I'm using the parameter of $500,000. So when I go in here to edit that, I get this screen. And so first of all, I put my name in here as the loan officer. I don't know whether your name shows up yet or not. Guess not. So there's that name. It's a VA loan. I could choose any other options I wanted to, but I'm just looking at VA. It's a refinance of the first mortgage. The proposal is called a VA IRRRL, which really means Interest Rate Reduction Refinance Loan. And I'm using $500,000 because, the median home price in Colorado Springs, I think is about $480 or something like that right now. And because it's a VA loan, you can finance 100% of that. And so, that's the first set of things that I put in here. The next is, okay, this is a primary residence. You could get a different outcome, of course, if it were a secondary residence or an investment property. I'm just using our zip code here in El Paso County. And because a VA IRRRL is a loan that's already on the books, you don't really have to requalify based upon your credit score and the appraised value and your income. The only real qualification is, have you been making your payments on time, and have you made 6 payments since the loan was originated? So I just leave in here $680. This is an unrealistic monthly income to be able to afford a $500,000 loan, but it doesn't matter because it's not even going to look at that. Now, the commitment period, you can see you can go all the way from an 8-day lock all the way up to a 90-day lock. That's going to change the interest rate that you're charged. I'm just going to use 15 days because hopefully you could close a VA IRRRL within 15 days. And here, these are things that I'm just leaving blank. I'm using one borrower. And here's that initial choice that I showed you. Lender paid or borrower paid. So I'm going to look at borrower paid first because that's going to be really what the true par rate would be that UWM is offering. Now somebody else, some other Wholesaler could be offering a different par. But this is a par rate that doesn't include any compensation for me. Other things that could affect what the interest rate is the choice of title company. Now, you have the choice of traditional lender's policy or a product that UWM has come up with that would put the fee inside the interest rate, just like you would put my compensation inside. I'm not going to use that. I'm just going to say traditional. It asks you if you want to waive any fees, and I don't. So I don't want any fees. When we say waived, it means they don't go away. It means they're included in the interest rate. Here we have some other items that we'll talk about much later. Much later. So I've got enough information in there that I can now click Get a Quote. So here is the VA Elite 30-year fixed. And so that rate, if it's borrower paid, meaning the borrower pays outside of this rate and has to bring that money to closing, is today 5.117. The principal and interest payment is $27.33. And because it's a VA, there's no mortgage insurance. So that makes the payment be that amount. Now, if I just click on that, I open up the details about the loan. So some of the details are this. There, as you can see, no mortgage insurance. There is a funding fee, however, and if a VA borrower has a 10% disability rating or more, this fee is waived. So, but I'm, for purposes of not knowing whether somebody is disabled, has a disability rating, I'm going to leave the $2,500 in there. So what that means is that the actual total loan amount is $500,250. And then when we look at the pricing here, we say, okay, the base price is this amount, $45.22, and because UWM is running this 90 basis point incentive, that is going to equal the amount of money that is the base price. So the final price here is 0. Now, if you look over here, you can see 5.1175. Here is the total price, 0. If you wanted to get a lower interest rate, you could lower that to 5% by paying $3,020.03. If you wanted to go to 4.875, that's going to cost you $6,400. 4.75 is going to be $94.41. 4.625 is going to cost you $13,000. 4.5 is going to cost you $16,000, and 4.375 would cost you $20,000. So if you wanted to buy the rate down, this is what it would cost you to do that. Going the other direction, if you could convince the borrower for some reason to have a higher rate, this is what it would cost. This is what they would get back for a higher rate. So if you used 5.125, the borrower would get back $211. If you followed that through and you could get the borrower to take a rate of 7.75, they'd get $20,000. So this column right here tells you what kind of a rebate they would get that they could use for some purpose. So if I just clicked on that 7.75, that then changes this to show that, okay, they're going to get, in parentheses, they would get $20,044.73. Question is, what would you use that for? And how would that make you competitive? Probably wouldn't, right? So, again, let's think about the rate that is starred here, which is the par rate of 5.117. That's on borrower paid. If I go back up here to the loan information and just change that to lender paid, now that's going to mean we're going to include my compensation. And the compensation that I've agreed to on a refi is 0.875, not even 1%. But if we do that, include my compensation in the rate has now jumped to 5.41%. And if you look at that, you can see, okay, there's that loan size again, $502,500. Here's my compensation. Here's my 8.75. That compensation is $42.68. And so that they call that the price, and they also call that the compensation. You can see that would cost 1 penny. You can see the 1 penny here. So if you wanted to include my comp wrap it into the interest rate, and you wanted to buy the rate down, you could get 5.375 for $841. You could get 5.25 for $1,700. So those are not too great amounts. But if you wanted to go to say 5%, or the 5.1, which was closest to what we would get if we were doing borrower paid, that would cost you $4,057.70. So you can see the same sort of thing happens as you go above what we could call my par. It's not really par. Now, if you were trying, as I would probably do, if you were trying to have this be a deal where we're trying to refinance somebody who's got a VA loan and it's at 6.81, which I found a year ago when I considered buying some leads. There were 2,700 people with a VA loan in El Paso County that were at or above 6.81%. So either of the numbers that you just saw there would be a big savings. But I could, if I wanted to, in addition to having no cash coming from the borrower, I could include some things like, we could say, well, there is a underwriter fee that United Wholesale is going to charge of $1,100 and some dollars. Let's include that in the rate. Instead of me having to hire or do myself the processing, let's do a full processor assist service. And I'm not sure whether I can use Track Plus or not. If I can, I don't even have to have any contact with the local title company. Sometimes, though, that'll not get me any results because maybe the VA requires a traditional title. So I've included those three things, and then when I've said, do we want those to be waived, meaning they're really not waived, but they're included, I would simply click all three of them to include them in the rate. Now, one of the things that UWM offers is a waiver of the escrow and hazard insurance. Some loan types would allow you to not be escrowing taxes and insurance. I don't think the VA does that, but if I put that in there, that may eliminate me getting any hits back. So I'm going to go ahead and put that in there, and then let's see if we can get a quote. And so the machine is running, and lo and behold, there is a quote. So if I include all of those costs and no escrow for taxes and insurance, meaning the borrower is going to pay those on their own when they become due, the insurance annually and the taxes, you could pay them semi-annually. So I get a 5.502% interest rate as opposed to the 5.11. When I look at how that all breaks down, you can see there's the loan size again, $500,000 plus the $2,500. Now over here on the pricing, you've got that fee that is included. It's called a waiver, but it's not going away. That is included in UWM's underwriting. And for a VA IRRRL, because it's so simple, they don't charge $1,100 and some dollars. They charge $552. PA plus, meaning it's going to be totally in the hands of their underwriting third party, which is really people that used to work for them and now work under the same roof. That costs $592 because it's still a simpler loan. Typically that could cost $800 or $900. Here's that incentive in which UWM is giving the 90 points. Here is the cost of the Track Plus. It's kind of weird, but here's the cost and here's the adjustment. So you subtract from this cost of $1,800 this $700, so your title costs are about $1,100, which are probably cheaper than Colorado title companies. Colorado title insurance and closing services are among the lowest in the country. Texas is among the highest. So using Track and Track Plus for Texas loans be a great idea. Maybe it doesn't make that much sense in terms of Colorado. And then here is my compensation, my 0.875. And so there's the $4,200. Again, you go over here, they star the one that's the ideal. That costs 1 penny. If you wanted a lower rate, you could get from 5.502 to 5.5, cost you $42. If you wanted 5.375, it's going to cost you $3,082. 5.25 is about $900 more. So again, you can see what it costs to get it to buy the rate down lower, even though you're including my compensation. And in reverse of that, if the borrower took a higher rate, agreed to take a higher rate, they would get paid $3,100, $3,600, all the way to, if they went to the very highest here, 7.25, they'd get $13,000. So that's kind of a brief explanation of using Easy Qualifier, and hopefully addresses some of the questions that we talked about yesterday.